Daily news and analysis. We keep you informed and inspired.
This is World Today.
China opposes U.S. move to sanction Chinese research institutions. Can U.S. coercion slow China's tech rise? Around 5,000 foreign-funded companies expanded their investment in China in the first half of the year. Why are foreign firms betting big on China? Israeli Prime Minister Netanyahu holds talks with U.S. President Trump at the White House. Is it a widening rift or pave the way for a repair? Hello and welcome to Road Today. I'm Anna in Beijing. To listen to this episode again or to catch up on previous episodes, you can download our podcast by searching Road Today. Our top story: China has expressed a strong dissatisfaction and firm opposition after the U.S. Department of Defense placed several Chinese research institutions on its sanction list. The Ministry of Commerce says China will take necessary measures to safeguard the legitimate rights and interests of the affected institutions. The ministry says the U.S. has overstretched the concept of national security and politicized scientific cooperation. Yes, the move undermines bilateral scientific exchanges and runs counter to the global trend toward international collaboration in innovation. So for more on this, joining us on the line is Einar Tangen, Senior Fellow at Center for International Governance Innovation, a Canadian think tank, and Chairman of Asia Narratives. Thanks for joining us, Einar.
Always a pleasure.
The U.S. has recently added a number of Chinese research institutions to its sanction list. China has criticized the move, saying it politicizes and weaponizes global scientific exchanges. So from your perspective, what long-term consequences would arise if basic research starts being, treated as a national security issue? What impact could this have on global scientific collaboration and also on cooperation between Chinese and American researchers?
Yeah, let's put it into perspective. What the goal of the U.S. is to preserve U.S. technological leadership and reduce dependence on China, limit China's access to technologies which they view as critical, future economic and military competitiveness. It's expanding these efforts to, in essence, contain China. They've tried to do it a little bit with oil, as we have seen, also with the Straits, and this is about the intellectual capacity. So when you start limiting the ability of institutions to cooperate, because that's what's happening when you blacklist U.S. companies and corporations can't have anything to do with them, you're in essence setting back potential solutions to climate change, health issues, all across the board, agriculture, all of the things that have made everything possible in the last 40, 50 years in terms of research and development. So it's very unfortunate. They're not helping the United States. That's the theory. What they're actually doing is just hurting the world.
Einar, the U.S. Federal Communications Commission has also introduced new rules restricting certain overseas imports of connected devices, including robotics equipment and grid-related technologies, while reportedly considering exemptions for manufacturers from countries such as Japan, South Korea, and the European Union. So basically, Chinese companies remain the primary target of these measures. So how should we understand this kind of selective approach and double standards?
Well, there's really nothing to understand. The U.S., as I said earlier, is trying to preserve its hegemony and its position, and it's doing so at the expense of China. China is seen as the major threat, but the fact is, these two countries and the globe is too far interconnected for this to work. What happens is the United States will become less competitive, saying that they won't import Chinese robots. Well, that's great. Well, China makes the best and the most inexpensive robots out there. Saying that I'm not going to buy better, less expensive stuff means that everything you produce is going to be more expensive. So once again, it's not really going to hurt China. It's going to hurt the U.S. competitiveness, and obviously it has an effect on the rest of the world as supply chains are rejigged and costs go up.
I know another piece of news. The White House is also reportedly considering a policy that would restrict U.S. companies from using Chinese open source AI models, while U.S. companies such as OpenAI and Anthropic are hyping up the so-called potential model theft and called for restrictions. But nearly 200 Silicon Valley startups argue that open source models from China provide affordable and accessible tools for innovation. Why had the U.S. tech sector become so divided over this issue? And if global access to open source AI models is restricted, would the greater impact be felt by China's AI industry or by the U.S. innovation ecosystem itself?
Let's work backwards. It's going to cost the United States. And so what we have here is a situation where the big money that was invested into Anthropic and OpenAI and things like that was betting on a closed model. That means that it's like you build your own library, you own it, and if anyone wants to use your product, they have to come through you. China has a different idea. They have a one library which anyone can go to, and it's basically free. And what it does is encourages, because it's free, it's much better for the developing world because they don't have this kind of money. And it's much better for those companies in the United States which are trying to develop and innovate. They don't want to pay extra fees to these large entities that really don't deserve it. If you want to use a product, fine. But this is just, if you think back to the inauguration of Donald Trump, you saw in the gallery a who's who of these big companies. Now, almost all of them are trying to protect their interests, which means they want the U.S. to embargo Chinese models so that they can get rich. So this is all that we're really talking about. Once again, it doesn't help the United States. It's not going to make U.S. products more attractive to others. They're still going to be way too expensive. And you're going to see the rest of the world already has gone in that direction. And the final shot that I saw was there's something called Moonshot, and they have an AI called Kimi. It's a direct competitor to Anthropic, and it scared them because they can deliver very high quality at a third or less of the price of Anthropic. So this is why you're starting to hear this. These people are going to Capitol Hill. They spent a lot of money lobbying, and they're trying to get the administration to protect them.
Anna, could you please elaborate more on that? Because clearly, China's rapid rise in high-tech industries has caused growing anxiety in the United States. How do you compare the momentum of technological development in China and the United States? And where do you see each country's strengths and challenges in the race of advanced technologies today?
Okay, I mean, America has some great scientists, and there's been a lot of original science that has been done and breakthroughs that have made in AI, especially in how to handle LLMs, setting up advanced data centers and things like this. But the problem is it's always based on this extraction model. That is, we will develop it like a drug. We develop it, and then if you want it, you have to pay us, and you have to pay us whatever it is we want. Well, China is saying, well, we don't do that. What we do is we look at the greater good. We allow competition. If a drug is needed, for instance, vaccines during COVID, what we'll do is we will share the technology to make sure that people continue to live as opposed to having to pay, or if they don't have the money, basically dying because they can't afford the vaccines. So it reflects two very different ideas. In terms of the U.S., they're frightened. That's the only way that you can put it. Why else would you be doing this? If they thought they could outcompete, they wouldn't be talking about this. But you have so much huge money, and a lot of it is looking more and more like a bubble. You have the chip makers who are getting huge orders from the data processing centers who are anticipating big demand from the AI generators. And they're throwing money at each other and investing each other, and you see these huge valuations which are at historic highs, much higher than the dot-com bubble, if you want to take that into consideration. So they're trying to protect, they're saying, well, we're too big to fail, and the U.S. government, you have to protect us. So this is not a good sign when the big guys are coming out and saying, if you basically do not support us, you're going to have a massive recession because there's going to be a piercing of this bubble that's been created.
But how concerned should China be, when facing such a series of oppressions, blockade, and sanctions from the United States? China has said it will take necessary measures to protect its research institutions and interests. What kind of responses could Beijing consider at this point?
Well, this is one of the things that I always kind of debate in my mind. And in one side, China needs to respond and say, look, if you do this, we have countermeasures that we can take. But quite frankly, China is sitting in a very good position. None of the stuff that we're talking about is going to be possible unless you have rare earths. Everything that goes into these chips and everything like that, they require these. So China can, in essence, say, well, if you don't want to play with us, we don't need to play with you. And this could bring things to a screeching halt, regardless of what the U.S. wants. If they can't make it, there's no point in talking about it. So at this point, China doesn't have to respond. What I see this as a series of own goals by the United States. If they keep doing this, what are they doing? They're adding more cost to the consumers. The estimated cost of not only this, the sanctions against China, but globally is adding another $40 billion to, basically a tax on American consumers who already feel that prices are too high. $4 gas, they're blaming the war. Now they're going to blame these tariffs. And it's slowly sinking into people that this is not about the rest of the world. It's about misplaced policies that are, in essence, making them pay for something that isn't working. Mm-hmm. China continues to innovate, and every time you have one of these sanctions, it just means that China is going to put more money into making sure that they can be resilient. Resilient means that they don't have to depend on the U.S. Now, this is a decision the U.S. is making, not China.
Mm-hmm. I know one last question, because this year, both sides, China and the United States, have been talking about the importance of a high-level engagement and keeping communication open. But at the same time, we continue to see new U.S. restrictions on China in technology, trade, and other areas. Is Washington going back to saying one thing while doing another, or is this simply become a new norm, the new reality of China-U.S. relations today?
Well, I think with Donald Trump, this is the norm. I mean, this is not an isolated incident. I think the situation with the Iranian war is very clear. He keeps declaring that he's won, that everyone wants to negotiate with them, that they're on the verge of something, and instead there are more attacks. It just is his style of negotiating is to cause confusion and see what he can get. But when you're dealing with countries who have, interests, it's not like a real estate deal. So these are things he can't walk away from. He can't walk away from what China's doing. He can't walk away from the war in Iran. So his strategies do not appear to be working. China is trying to figure out how to work with them. I think at the last meeting between Xi and Trump, there was very talked about transactionalism. You do A, we'll do B. If we do, after we do B, if you do C, we'll do D. But obviously Donald Trump feels very much under pressure because of the Epstein files, the economic situation, the unending war, fractures within his own party. And he feels he has to kind of say, communism, Reds under the bed, all these kind of buzzwords that were used, unfortunately, many years ago by his mentor, Roy Cohn, who was a lawyer for the House Un-American Activities Committee. And he thinks that this will somehow, distract attention from the realities. I don't think so.
Mm-hmm. Thanks, Einar, for those insightful analysis. That was Einar Tengen, Senior Fellow at the Center for International Governance Innovation, a Canadian think tank, and Chairman of Asia Narratives. You've been listening to World Today. China is attracting more foreign investment, not only in volume, but increasingly in quality. In the first half of this year, nearly 4,800 foreign companies expanded their investment in China. Investment in high-tech industries surged more than 33%, accounting for over 40% of total foreign direct investment. Meanwhile, Beijing is introducing new measures to encourage overseas investment in advanced manufacturing, robotics, and modern services as part of its push for high-quality development. What's driving renewed confidence among foreign investors, and what does this tell us about China's evolving growth strategy? For more on this, Zhao Yang spoke with Li Lun, Assistant Professor of Economics at Peking University. Professor Li Lun, thank you very much for joining us. Nearly 4,800 foreign companies increased their investment in China in the first half of this year. So beyond the headline numbers, what does this tell us about how multinational companies are reassessing China's market and its long-term prospects?
Yeah, I think the fact that reinvestment by nearly 4,800 companies, as you mentioned, is a very informative signal because these companies have already experienced a lot of China's operating environment, China's regulatory system, China's consumer base, China's supply chain. So after experiencing this environment, they still make the decision to add more capital, which is suggesting that a lot of companies are viewing China as in their long-term plan as a commercially viable opportunity. So, and I think the multinationals are increasingly viewing China not just as a low-cost manufacturing base, and I think the concentration in investment, as we have seen in the data, in terms of in research and development, in advanced equipment, in communication and digital industries, these are indicating that the foreign companies are using China not just as a market, but also as a production platform, a innovation location, and also treating these simultaneously. So the numbers, and I think especially for the advanced manufacturing, are suggesting that the companies are adopting China in their long-term strategy, in their long-term plan, and viewing China as a market in which they need to increase their presence in the long run.
And at a time when geopolitical tensions and supply chain diversification rhetorics are still there, why are so many multinationals choosing to expand rather than reduce their investment in China?
Yeah, so when it comes to geopolitical tensions, I think China usually serves as a stabilizer to basically reduce the risk rather than increase the risk. So China offers this unique combination of market scale with the depth of supply chain because, for example, when it comes to a lot of advanced manufacturing industries and sectors, firms can find all of their suppliers, their engineers, their logistics services, digital infrastructure, everything in the same cluster. So there's no other country that have this entire ecosystem that's in basically a closely connected one market. So also a lot of people mention the competition in China, but the competition also offers some value to innovation because companies need to kind of develop their products more quickly to reduce the cost and also adapt to the changing consumer demands. So if you have a company that offers a successful product, offers a successful business model, in China especially, these success can be quickly multiplied to a lot of different consumer bases and gain a lot of market share in a short amount of time. So this is another reason why China is being treated as not just a big market or a big production base, but also a innovation or commercialization platform or hub. So I think for multinationals, the decision about diversification of their supply chain is not just about choosing China versus another country. It's about maybe choosing China plus another country for regional diversification strategy. But the goal is to kind of maintain access to China while kind of making the global supply chain more resilient.
And foreign investment in China's high-tech industries grew by more than 1/3 and now represents over 40% of the total FDI. So what's behind this shift?
Yeah, I think, as I mentioned, China offers a lot of opportunities for commercializing these new technologies. So a company can quickly develop a product and also connect with the suppliers, test it with a large consumer base, and also scale up their production within the same economy. So this combination is reducing time between companies' research, production, and market adoption. So this I think explains why the investment in, especially in the high tech or cutting edge industries, are surging more than 30% year on year. And I think overall, in macroeconomically speaking, industrial upgrading is the background, is creating demand for a lot of specialized foreign capacities. For example, when Chinese manufacturing companies become more automated and also technological sophisticated, there's a lot of opportunities for foreign companies supplying for these advanced materials, supplying for the industrial software, sensors, precision instruments, and so on and so forth. Also, I think there's a composition effect. The high tech share has risen partly because companies are kind of substituting away from some less productive sectors to the most productive sectors, which is in advanced manufacturing. This is also reflecting that the investors are choosing very carefully and also redirecting their foreign capital towards the more technological intensive parts of the economy.
And China is actively encouraging the foreign investment in areas such as advanced manufacturing, humanoid robots, and new materials. So what do these priority sectors tell us about where China's economy is heading over the next decade?
Yeah, so I think the common component of these sectors is that they can raise productivity across the wider economy. So when it comes to, for example, advanced manufacturing, whether we are talking about advanced materials or automobiles, electronics, machinery, these can kind of improve the productivity in manufacturing, lower the cost for consumption products. And when it comes to humanoid robots, it basically combines a lot of strategic technologies. It requires progress in artificial intelligence. It requires, development in sensors, chips, battery, motors, and so on and so forth. So as you also mentioned, new materials and energy efficient equipment, these are also addressing both the competitiveness of a country, also as well as the sustainability of a country, because when it comes to better materials, when it comes to energy efficient machinery, it's also going to reduce the operating cost and supports the green transition. So these are also increasingly more important topics in the future. And foreign investment can also contribute to this trend because the multinational companies could introduce a lot of their specialized technology, their management systems, their international standards to China. To basically, I think these sectors are being prioritized because they are at the intersection of technological upgrading, green development, and also the supply chain resilience.
And China also plans to strengthen the foreign-funded R&D centers and make it easier for global talent to work here. So how critical are these policies, do you think?
Yeah, I think these are very essential if China wants foreign investment to kind of move from simply in the production sector or the manufacturing sector towards the knowledge creation sector. Because if you have more R&D center, they're going to generate patents, they're going to have engineering capabilities, and they're going to have multinational collaboration with Chinese scientists. So China, the good thing is that China is already offering a very large research ecosystem, but I think the local R&D, the R&D that combines, that basically shortens the distance between consumer demand and product development, this is the comparative advantage of China. So if you're an engineer or a scientist working in China, you can respond more quickly to the needs of local consumers, and also you could put these needs into development and change that development to the product very quickly. So I think the talent policy that you mentioned is very important because attracting more foreign talents to these R&D centers, this is very essential to create kind of a place where multinational companies not just manufacture products, but also create a place where they could develop their future technologies and also, grow their next stage of high quality growth.
And China is making consumption growth a cornerstone of the country's economic strategy. So what kind of opportunities might this create for foreign investors?
Yeah, I think the strongest opportunities could emerge in sectors like services or experience-based consumption because government has identified, for example, the tourism or high-quality household services, performances, sporting events, and so on and so forth as the new areas of consumption growth. And I think foreign companies, oftentimes, they possess a lot of brands, operating experience, also the expertise when it comes to service management. So I think these are the sectors that foreign investment could create as an opportunity. And when it comes to, for example, digital retail, also when it comes to, for example, more segmented demand, for example, in terms of luxury goods, in terms of healthcare, in terms of elderly services, in terms of energy efficient appliances, sporting products, pet services. So these are the areas where the foreign investors can bring a lot of experience and create this better ecosystem for the consumption, especially when it comes to service sector. And I think for a more successful integration, I think it also requires localization. It also requires competitive pricing. We don't want a overly priced foreign service, but also I think the foreign companies need to have a more detailed understanding of what's the consumer preferences, especially in China.
That was Li Lun, assistant professor of economics at Peking University. More to come. South Korea's stock market has taken another sharp hit. Is this a short-term shock or a sign of deeper trouble ahead? U.S. AI companies are secretly buying and destroying millions of books. AI may be transforming the future, but at what cost? You're listening to World Today. We'll be back after a short break. You've been listening to World Today with me, Anna, in Beijing. Israeli Prime Minister Benjamin Netanyahu has met with U.S. President Donald Trump in a closed-door meeting at the White House. It marked their first face-to-face talks since the two leaders jointly launched military strikes against Iran in February. The meeting came amid widening differences over how to manage the conflict with Iran and broader regional security issues. So to delve into this, joining us on the line is Dr. Wang Jing, Middle East expert in Xi'an, China. Thanks for joining us, Dr. Wang.
It's my great pleasure.
Netanyahu's latest visit to Washington comes amid growing public disagreements between Israel and the U.S. over how to handle the Iran conflict. Does this meeting represent a genuine rift in the alliance, or is it more about managing differences within a long-standing strategic partnership?
I think you very clearly put it forward that for Netanyahu and also for Israeli government, it's very necessary to repair the relations with the United States and to try to handle the so-called disagreements between the two countries that has already become more and more clear during the past weeks. So that's why I think this is the Prime Minister Benjamin Netanyahu, his very first priority that the relations between the United States and Israel should be repaired, and the so-called close ties or so-called unbroken allies relations between the two countries should be highlighted again. So I think it is the first priority for his visit. And the other one, I think the priority for Netanyahu, his visit should not be ignored, is that he hopes to some extent to attract more popularities, to attract more voters at home through this trip, because we know that if everything goes well, I mean, in late September or late October, that a new round of elections will be held in Israel. And according to the poll released by different medias inside Israel, Netanyahu's poll is not so positive. So that's why he hopes to some extent to attract the voters at home through this trip to United States and meeting with Donald Trump. So that's why I think maybe for the bilateral dimension, for the bilateral perspective between Israel and the United States, he hopes to do something for the repair of the bilateral relations. But I think for himself, how to attract more voters, how to make the better preparation for the upcoming elections would be his political priority.
Then besides what have been mentioned, what exactly does Netanyahu hope to achieve from this meeting regarding Iran policy and regional security?
Well, I think Iran's policy is, he hopes, first of all, he hopes to show his very strong man or very assertive stances against Iran, because in Israel, although that different countries have different understandings over what should be done, over what is the situation right now, what is ongoing world structure. But for Netanyahu and for Israeli public, absolutely majority of them believe that Israel should continue to uphold the very assertive stances, and Netanyahu has to some extent, follow this public opinion trend. So I think he will show his very assertive stances by expressing very aggressive words and rhetorics against Iran, of course, with United States leader Donald Trump. And also, I think the other one is that they have to find ways to nail down the growing division. Because for United States and Israel, of course, they believe it's necessary to launch attacks against Iran, to some extent to impose new pressure against Iran through military activities. But they have different goals. United States believe that the military strikes should be the tool, not the goal. But for Israel, that the military strikes should be the goal, not just the tool. So that's why for Israel, maybe they hope to achieve more from the military strikes against Iran, and they hope that the United States could continue to support them. They are very aggressive or very harsh strategies against Iran. So that's why I think Israel's rhetorics will be very assertive, aggressive, very harsh. And also, I think these divisions will be continually witnessed by the international media.
But we see reports saying that Trump has expressed frustration with some of Netanyahu's decisions, but he continues to maintain close ties with Israel. What political and strategic calculation are shaping Trump's approach toward Netanyahu and Israel at this moment?
I think Donald Trump and also Netanyahu's policies towards each other are simple because they have to base their policies upon their own national interests and own national demands. As we just mentioned, that from Israeli perspective, they hope that the United States should stand closely with them and to continue to impose new pressure against Iran. Because from the understanding of Israel, Iran is always the number one target. Iran is always the so-called number one so-called bad egg in this region. So that's Iran should not be trusted, and the dialogue between the United States and Iran should be cut. But then from the perspective of the United States, maybe Iran is not so good. But from the Washington's perspective, that to make some concessions, to reach a deal, to end the war, and to find a way to withdraw from the ongoing war is very necessary for Donald Trump's political gains. So that's why they have maybe they have the shared views, but on the other hand, as you just mentioned, the divisions will also be expressed, and the divisions would also be seen by the media and witnessed by the media, and so that's why the division maybe they hope United States leader and Israeli leader they hope to some extent handle and manage the division, but it's very difficult task.
Speaking of the divisions, is this mainly a tactical disagreement on just one matter, or does it reveal deeper differences in how the two countries view the future of the Middle East?
Well, I think this is a very structural division because United States is a very important leader to some extent. To some extent, he's still the strongest power in this region, and still have the most influence in this region, and still become the so-called leader of the region, in the Middle East. So that's why United States has to take all the consideration of all the countries into his own considerations. So that's why the United States should look at and closely Iran, but also United States has to consider the interests of the Emirates, the Saudis, the Kuwait, the Qatar, and Egypt, and even sometimes Turkey and its relations with Pakistan and so on. But then from the understanding of Israel, they watch closely of their own national security because they are the regional country. They have to continually to live with other neighboring as well as the regional countries in the future. So that's why for Israel, they closely watch Iran's so-called threat out of Iran's nuclear capabilities and Iran's regional influence. So that's why for Israeli understanding that to do something more to the most extent to not only to constrain Iran's influence, but also to some extent overthrow Iran's regime should be the very preferred option for Iran for Israelis. So that's why the division will come out. And although they hope Israel and the United States hope to handle the division, but it's very unlikely. So the division will still grow.
Mm-hmm. Dr. Wang, beyond the bilateral relationship, how could the outcome of this meeting affect the broader Middle East, especially Iran's calculation, regional security arrangements, and efforts toward normalization between Israel and Arab countries?
I think of course, it will influence a lot of things because the United States' influence in this region is still both the leading one, still the very dominant one. And also Israel's regional influence and regional activities could influence a lot of things, including the situation in Lebanon, the situation in Yemen, the situation maybe in Syria, the situation in Palestine, the situation in many other parts of this region. So that's why when the two countries they talk with each other, on the one hand, maybe they hope to push forward the so-called Abraham Accords, which offer the very structure for the normalization between Israel and other Arab states, particularly the Saudis. But I don't think it's an easy task. And also, on the other hand, as we say that the Palestinian issue, the Lebanon issue will also be discussed, and how to handle the so-called threat of Iran will also be closely watched by the two leaders. So let's wait and see what will happen. But no matter how, I think this is a very critical meeting between the two leaders from the United States and Israel, not only for themselves, for their own bilateral relations, but also for this region as well, maybe for the global security.
Mm-hmm. Thanks for those valuable insights. That was Dr. Wang Jing, Middle East expert in Xi'an, China. South Korea's stock market has taken another sharp hit. The benchmark index Kospi fell more than 8% at one point on Wednesday, triggering a market circuit breaker. Reports say semiconductor stocks were at the center of the sell-off. This is the ninth time that the market tripped its circuit breaker this year. It's also the first time on record that the index did so on 2 straight trading days. So for more on this topic, my colleague Gao Yingshi spoke with Professor Zhang Gong with the University of International Business and Economics.
Let's start with what happened today. So, what's driving this sharp sell-off, and why are semiconductor stocks like Samsung and SK Hynix at the center of it?
Well, I just thought because these stocks are flying too high, there is a limit called the sky. When you see such spectacular run-up, investors are going to take some chips off the table. That's why you're seeing stock price of these two semiconductor memory plays basically coming down. And I think it also has to do with China's IPO of its own memory play, that is CXMT. Probably China's the largest IPO ever happened here in China. And now in a world of three memory chip makers, right now there's a fourth player coming from China. And that's going to take some market share away. And that's a negative development on the part of the incumbent players. And the two Korean companies are being hit very hard right now.
This is the 9th circuit breaker this year. This is the first time ever on 2 straight days. So why has the South Korean market become so unstable?
Well, I think it has a lot to do with the market size. In the grand scheme of things, compared to the big stock exchanges around the world, the Korean stock exchange is still relatively small. And it has a lot of foreign investors, and a lot of them are speculators. They move money in, they move money out. Due to the small size of the market, can be affected very dramatically. Going to see this dramatic upswing and then decline very rapidly. And I think this is exactly what's happening here right now. I think it's mostly because the market is going too high for some time. Reason one, and second reason is the negative development as a result of the IPO of this Chinese company. This market is going to be a lot more competitive as opposed to be a sort of a comfortable cartel of these three companies. There's going to be market competition, there's going to be price pressure, and ultimately all of these things will translate into pressure on the margins of these incumbent companies. And that's being affected on the stock markets right now. So I think these are the primary reasons to what's happening right now.
South Korea's economy leans heavily on chips and tech exports. So, if this volatility continues, what are the real risks for the broader economy in South Korea?
I think it's going to affect the semiconductor industry less significantly, in my view. I think the impact might be manifesting, what we economists call the wealth effect. In other words, as a result of declining market value, the wealth being felt by people in Korea, those people who own stocks, they feel their wealth being diminishing a little bit, and that impacts the capacity to consume. I think the impact probably is going to be on the consumption side, and it might affect the economic growth rate for the rest of the year. But overall, I think it might be still very measured reduction, not so much of a big impact in my view.
So many of the worry seems tied to AI-related valuations. Is this mainly the South Korean problem, or it also applies to the global tech sector as a whole?
Yeah, I think it's the same thing is happening in the United States as well. And you see the tech stocks coming down a little bit. I think there's a hypothesis that there's an AI bubble brewing right now. Whether it's a true bubble or not, we don't know yet. I'm not going to make a judgment at this point. I think it's still very important that the AI development is driving a lot of growth in the United States, in South Korea, and in Japan. And certainly also in China. I'm not sure it's a bubble, but I think if some kind of a market correction is it's rightly around the corner, and maybe it's already happening. And due to the small size, as I said, due to the small size of the Korean stock exchange, I think the impact is going to be, the correction is going to be more pronounced, more dramatic. But other than that, I'm still quite hopeful for the future of AI.
Speaking about the United States, how closely is this linked to what's happening with the U.S. chip stocks? Could kind of weakness on Wall Street keep spilling over into the Asian market?
It's a very tightly knit network right now, in my view. I mean, the countries that are mostly involved in AI development are United States, China, South Korea, Japan. And I think these four countries are probably the most important countries participating in the AI movement, in AI development. You can think of this as a production network connecting these four countries. There's going to be competition among them. There's also going to be cooperation among them. And this is not necessarily a bad thing, in my view. I mean, it's I think the East Asian market countries should be very happy for their position in this new development, this revolutionary development in human history. I think we need to take a more of a long-term view. I think a market, I would call it a market correction right now. It's not a recession. I think it's a market correction. Some kind of a market correction over the long run, it really doesn't mean much. I think we're just still at the very beginning of this AI development into the future, and market up and downs. That's quite normal. I won't take too much of that. I think the investors' confidence in AI and the mass market confidence in AI is still very much unwavering.
Okay, and we also see reports say that South Korean government is considering steps to stabilize the market. So, what options does it really have, and are they likely to work?
There are a couple of things. The government can, for example, increase the difficulties of money moving out of the country. For example, it can, increase the interest rates so as to increase the cost of using dollar or euros and translating to local currencies to invest in a stock market, and it increases their cost and it reduces speculative investment. All of these things can help to some extent, but I think the market reaction is very fast. I think by the time the government comes with these policies and implement them, I think they're probably already gone. I'm a little bit skeptical that the Korean government can do a lot about it. I think the impact might be more on the psychological side, stating that the government is going to do something about it, and that's going to reduce speculative behaviors on some market players.
Speaking about psychology, do you think there's a risk that stepping in too aggressively sends the wrong signal, making investors even more nervous rather than just calming them down?
Yeah, I think I agree with that statement. I think, as I said, I think there's very limited space that the government can do things. And typically, even the government interferes in this case, the impact over the long term is going to be very, very limited. I think in a couple of months, I think the government probably look back and see if the policy is really worth it. Again, I think this is probably more psychological in nature. It sends a signal to the market, and in terms of the things that the government is really going to do, I'm a little bit skeptical.
That was Professor Zhang Gong with the University of International Business and Economics, speaking with my colleague Gao Yingxu. Coming up, U.S. AI companies are secretly buying and destroying millions of books. AI may be transforming the future, but at what cost? This is World Today. Stay with us.
Welcome. I am Chu Zhang, Deputy Director at the Center for Middle Eastern Studies at Fudan University. On the World Today program, we will dive beyond the headlines to uncover the stories, trends, and impacts that connect states across the globe. Join me on World Today.
You've been listening to World Today. Artificial intelligence companies are once again under scrutiny, this time over their use of printed books to train AI models. U.S. firms, including Anthropic, have reportedly purchased millions of used books, scanned their contents to train large language models, and then destroyed the original copies on an industrial scale. The practice has reignited debate over copyright, cultural preservation, and the environmental and ethical costs of developing more powerful AI systems. So to dive into this, let's have Harvey Zoding, former vice president of ABC TV Network and senior fellow of the Center for China and Globalization. Thanks for joining us, Harvey.
I'm glad to be here.
Harvey, the new investigation shows that some U.S. AI companies destroy physical books after using them to train AI models. These companies argue they need high-quality data to improve AI systems. But why has the destruction of physical books triggered such a strong public reaction?
Well, to me, the reaction is not just about the pulping of paper. It's about what the books represent. Mm-hmm. They're symbols of culture, memory, and human creativity. When people hear that millions of books are being cut up, are being scanned, are being tossed in the garbage, it creates the impression that centuries, and in China's case, millennia of human knowledge are being ground up to be literally tossed on the trash heap of history.
Harvey, the books were reportedly secretly but legally purchased before being digitalized. As a former vice president of ABC TV Network, I believe you have extensive experience dealing with copyrights, right? So from a legal perspective, does buying a physical copy automatically grant the right to use its contents for AI training? Where should the line be drawn between ownership and intellectual property rights?
Well, buying a physical book gives you ownership of that particular copy, but it doesn't give you ownership of the copyright. The copyright remains with the author or a publisher. And this distinction, it's really crucial. I can buy a novel, I can read it, I can lend it to a friend or even pulp my own copy, but I generally can't reproduce it, distribute copies, or use it in ways reserved to the copyright owner without their permission or a legal exception. The central legal issue in the AI cases is whether copying books for LLM AI model training qualifies as what's called fair use under copyright law. That question is still being resolved by the courts. Sadly, the law has always been ill-equipped to decide on matters of new technology, whether it's a steam engine in the first industrial revolution or the IP rights of AI companies and authors today.
Then, beyond copyright, many critics argue that physically destroying books raises concerns about cultural preservation. Do you think this debate is moving beyond intellectual property rights and becoming a broader conversation about how society values knowledge, history, and cultural heritage in the AI era?
Yes, I think the discussion has expanded well beyond copyright law. Copyright determines who owns legal rights in creative works, but cultural preservation presents different questions. What responsibilities do we have to protect our intellectual heritage, and who owns and controls that heritage? It's now true that most of the trash books were ordinary ones, not unique historical artifacts. But what I and others worry about is limiting or losing access to books from the pre-AI era, because unlike books of today that are often polluted by vomited up AI slop, these relics are made by humans and not machines. We also worry about the consequences of losing access to large numbers of physical books, especially out-of-print works that in many cases may already be difficult to find.
That's a very insightful point. We see the rapid development of AI is outpacing existing legal and ethical frameworks. Then what kind of international standards or industry guidelines may be needed to balance technological innovation with copyright protection?
Well, I do think AI is developing faster than legal systems can adapt. Most copyright laws were written well before anyone foresaw training LLM AI models on millions of images and recordings. It's clear to me that greater consistency internationally is needed on these matters, and we have to get them clear as soon as possible. So AI needs to be regulated, but not creativity. So we have to find a sweet spot. The goal needs to be legal certainty that allows respondents innovation while maintaining public trust and ensuring that creators continue to have meaningful incentives to produce new works. So as I wrote in an op-ed in China Daily on Monday, I'm thrilled that China, like in so many fields, is leading the way with President Xi's announcement that 28 nations have partnered with China to address fundamental questions like these in the new World Artificial Intelligence Cooperation Organization. Sadly, all hands need to be on deck, but the U.S., EU, Japan, and some others were conspicuously missing.
Thank you very much, Harvey, for those insightful analysis. That was Harvey Zoding, former Vice President of ABC TV Network and a Senior Fellow of the Center for China and Globalization. That's all the time for this edition of World Today. To listen to this episode again or to catch up on previous episodes, you can download our podcast by searching World Today. For further discussion, you can also follow us on X. It's CGTN Radio. I'm Anna in Beijing. Thank you so much for listening. Bye for now.